Hello viewers, welcome again to Already Late. Shocking news, crude oil prices come crashing down. Crude oil price at $0.01 for the first time in history. Crude futures at negative. This is what I have been hearing since last few hours. Now let me explain what exactly happened and how can it impact us. I will not get into the technicalities of types of crude. This price crash we are talking about is a crude called WTI, commonly known as NYMEX crude. We are already aware that crude prices have been in a declining trend for the past couple of months. The main reason behind this was an ugly price war between Russia and Saudi Arabia, where both the countries did not reduce their production levels. This led to a continuous supply in the market. To make matters worse, the corona pandemic became a gigantic trouble for the world, resulting in massive reduction of demand for crude. During the same period, there were a lot of people who were buying crude oil contracts as they were expecting the prices to rise. But unfortunately for them, that did not happen. Now, crude being a commodity requires that the buyer of the contract takes delivery of the oil on the stipulated date. The prices which fell to minus $17.73 were of the May futures, which expire on 20th April. This means that whoever has a buy position in this contract is required now to take delivery. The issue for the buyers was whom to sell this crude to. With lower demand, there aren't many takers for this crude at the moment. This means that the buyer of the contract has to store this crude until demand improves. When will the demand improve? The answer to this is very difficult to predict given the current uncertain scenario we are living in. This will result in a very high storage cost for the buyer of the contract, as already most storage facilities are full with the older stock. With time running out, the buyers were in a catch-22 situation, and to avoid carrying and storing actual crude oil, they started selling at any price available to cut their losses. From the buyer's perspective, it still makes sense to pay money along with the crude if it results in lesser loss as compared to storage costs. So all hell broke loose, and in a matter of minutes, the price came crashing to negative territory. Now, if you are all excited to go to the petrol pump after the lockdown and ask the petrol pump owner to pay you for the petrol, hold your horses. Nothing of that sort is gonna happen. A quick look at the next few months' contracts will give you a better understanding. June month contract is at around $21 as we speak, July at 27, August at 29. Will we see such unprecedented moves again? You may see this as early as 18th May when the June month contract expires. If demand does not increase in the next few weeks, or if the war between Russia and Saudi Arabia continue and the supply of crude oil does not decrease. What is the impact on India? The longer the crude remains at these lower levels, the better it is for our economy. If by the time we get back to near normal from the corona challenge and crude is still at these levels, it will be a big positive factor to push our economy back on the growth trajectory. So it's all looking good for India if crude remains at these levels. I hope you like my simple analysis. If you did, please do like the video, share this video, and do not forget to subscribe to my channel. Thank you.